Hello, welcome to Spy Money. Let's talk about Spy Money Shaker Indicator for NinjaTrader 8. This indicator works solely off of volatility. It does not work from a lagging indicator like a moving average or anything like that. It's nothing at all like that. This one is accurate within the price. Everything moves according to the price. It doesn't move after the price. So let's get into it. So we're looking at our NQ right now, and as far as the settings and so forth, I give those to whoever purchases the indicator, and I give the um, different time charts and stuff that I recommend. But again, you change it according to how your strategy is. So the way this is the way it works is you have a white and a red. This is your signal bar. Your white means long, your red means short, and then you have these targets. These gray lines are your targets for profit. Now, that's not to say it won't keep on going, but as you can see, as the price goes up, these targets will actually get higher as well. There's also differences in thickness between these two. They are, like right here, if we take this one and look from right there to right here is $410. From right here to right there is $390. And then if you go back over to here, from there to there is 385. So each one of these will be different from the other because it depends on the volatility of the market at that time for how far these targets are. Now these can be adjusted. I have them set at a level that I like, but you can adjust these to where they're a little bit further out. And if your trading is different than mine or whichever, then you can adjust them. You can make them tighter. So let's just give an example. On this one right here, this was last Friday. You can see the time down here is roughly 3:30 rolling through here. I usually don't trade after 3:30, but you could with this indicator. So if you go in, going from white to red, that's where you would enter, and your exit at the worst would be at the white to red. So there's $1,015 on one contract. If you had taken at the very top up here, 1665, it depends on where you want to be. But let's just say you took this and went right up and you started pulling back. There's $145 if you didn't let it run. And then, if you had your stop through here and then it pulled back, you could hop in again. So if you did that, you go in and say you hop in again right there, you go up, maybe you play it to right here. You're just a scalper. Or, you could just go ahead and put, say, one target on there, and then you could do one target on the second one. So let's get rid of some of these here. So we take those two off. So right there's on this one's on this line, and then if we come back, and let's say you had a third target right here, and let's say you had a fourth target, and if you had a fifth target, one, two, you didn't quite hit it, but you went up, you finally came up, maybe you had your stop just below, so right there's 1435. So if you were trading 5 contracts, there's where you would be if you had had those targets set for where you want to be. So you would set that up under an ATM strategy and set it up to where you've got, say you're entering, you put your exit whatever you want. Usually, your exit's usually down below your candle here. Depends on what you want. On NQ, somewhere between 10, 15 points. Depends on the day. Sometimes you might have to go 25 points. Just depends on the day. But that's, you'll play around with it and figure out what works for you for your strategy. Once you hit that and you get all your targets up here, then you can move your targets to the different lines and make it work for you. And then you can move your stop up for a break even or whichever, so that you could always be making. On this one right here, if you had entered, oops, wrong one. If we come up here, and if you had entered on that level, worst case scenario is right there at change colors again, there's $405. But again, you can set these on different levels. You can have one, say here. See, actually it would be, your first target would be there. If it come down, you might take that profit there. So if you did, it's 335. And then your second one would be right there, 325. And then your third one would be right here. And you can see these levels move with the volatility. And then when you come on down, the best you could have got, which we know you wouldn't have got here, but there's 770 if you got off the bottom. But we know that your stop would have been right up in here. But you could have made that if you had taken profit there. So, and then when you come back over here at the end of the day, we'll go back up and look at that, your entry on the white, and let's just say you took it at the top. There's 975 potential profit. You wouldn't have been there. You probably would have been right on through here, 770, depending on where you move your stop. So this is at the end of the day. So you're thinking to yourself, well, what about, the opener before that? So if we come back and let's just look at the open and see how it works. So the open would be right here is the open. So if you took the open, you wouldn't be in the long there, but you would have got this short. So if you got the short, and if we just played color change only, is 1170. And then this one right here, you wouldn't have allowed this to keep coming down. So when this went up and gets through there, you want to keep your stop at least to right there. So you would be right there at 185. And you wouldn't have lost money here if you would be following with your trail stop. When this goes in, it turns red again. If you got in right there, at the very bottom would be 765. So you can play this to your advantage, and you will have losing trade. Let me find something that would be a loser. If you took this short right here, you would have lost on that. You got to keep your stops tight. And let's see, find another place here that would be a loser. It's very hard to find losers. This one right here, potentially you could have lost on this trade here if you didn't take the profit and being break even. You probably would have lost a little bit, and then you got in a short. Probably break even on that short because you're almost to there, so you would actually have a break even. I would. And then this one here, you would end up picking it up. So let's just say you lost, say you lost $200 there. Actually, you would have made money here, but let's say you lost 200 here, and which it wouldn't be that much on my trading. But let's say you lost 200 there, you lost 200 there, that's 400. Well, you would have picked up, let me go up here. You would have picked up potentially 285 there. So more than likely, you wouldn't even lost 200 here. If you entered right here, and let's just say you come down, there's 75, but let's just call it 200 for numbers. So you got 400, then you made another almost 3, and then right here you would have at least broke even. So you wouldn't have really made any money here, been broke even, and then you come back here, a possible 670. So even with these small losses that you can have, depending on how you play it, you're still going to make up for it on your when it does take off. Even right here, if you got in right there and got all the way down to here, there's 710, and let's just say you got in there and rode it all the way up. There's 2,500. So you're going to have some losses on it. You're not going to be 100% on this. Maybe you are. Maybe you're a better trader. I have losses. Whenever I trade, I take profit or get in a trade and it goes the wrong way than what I want, and I just go ahead and take my stop and lose on that trade and move on, and then pick up on the others. That's how I trade. So whenever you're trading, it'll actually work out good for you. When you have this big old, you can see that's a short, you're better off just not take longs. You might miss this one because you're always taking the short, or maybe you just get in at the top and you just let it go. I mean, when this comes down, this right here is too far of a pullback for me. But let's just say that you entered right here and you exited down here, coming out of it, 975. Maybe you did take that long. I don't know if I would have based on this, but usually those little pullbacks, you can pick up a few $100s at least. And a few $100, 10 times a day is a couple $1,000s. When you come over here, this is going sideways. Maybe you don't trade it at all. And then you start coming down, you get the pullback, and maybe you get up right there. And let's just say you run it out to right here. There's 1695. I'm not cherry picking this either. So this is on a 30-day chart, so I'm just going to run it back. We'll just pick right here. I mean, You've got all this chop. You know better than to trade that. But if you got in here long, you went up, you got in a short, you probably could have carried out most of this. If your short is at 30, so that went, no, that'd be too far. So you're looking at 40 points right here. But when you start seeing it like this, just don't trade it. And then eventually you're going to break out like it did here. And when it does, and you get that little pullback, then you can hop in. So, when you're getting this chop, you're eventually going to break out, and usually your first breakout, it'll pull back, and then you can start trading it. And that's usually what I do. So, again, you're going to have some losses in there somewhere. This is in the afternoon. We know better than to trade afternoon anyway, as far as around 12 to 1, because that's usually when it gets choppy. But you can trade it. You pick up some extra trades in here. Look at this one. This is from the opening. A lot of good trades in here that you could have gotten. And again, use these lines to your benefit. That's where you want to put your profit taking. So let's go ahead and look at ES. So we're going to look at ES. This is the end of the day Friday. And, if you had got in right here and played it all the way to the top, there's a chance of 650. I don't know if me personally, when this came up and pulled up, my stop would have been right here. So for me, my stop would have been there. It's $250. It pulled down, started coming back up. When it started coming back up, I can choose to get back in. So, there's another 437. So ES works the same as NQ as far as the trading. And let's look at the open. We'll take a look at the open on it. So right here is the open. You wouldn't be in a trade here if you're trading the open. You would have got in the short. So on the short, right there it is. And it went down. There's 662 if you played red to white. Then there's 362. Very good trade. Put some contracts behind that, and you're going to have a lot of money. A lot of people, I'd say probably the majority of the people that I work with, their goal, a realistic goal, is $1,000 a day. That's $250,000 a year, roughly, depending on holidays and such. But you're $250,000 if you just make $1,000 a day. So the majority of the people that I work with, that's their goal. Now I have some of them that want to make $2,000 a day, some $10,000 a day, some want $30,000 a day. It just depends on what they want. And really, once you get your strategy down and you get the proper trading techniques, you can just put more contracts behind it. So on this one, instead of making $600, you put 10 contracts behind it, $6,000. But it all depends on the market and your trading ability and so forth as far as what to do. We never know that this is going to go up to here and then back down to here. We don't know that. When we're looking at this right here, we're seeing this range. So if we see a range from, really, I guess that's about right here to right here. When we see that range, we're thinking it's probably going to play out back to here. So, when you go over, you start clicking there, you wait on it, it turns white, you get in it right there, and it did. It went all the way back up to here. Now, when it gets up to there, you don't have to wait on this. You can play this channel out if you wanted and just come right back down. And there you go. You come right back down to it, and it's still playing this range. It broke out right there, but you're still within that range. And this is at 10 o'clock in the morning on Eastern time. So, it actually broke out, and then at that point, you don't know what it's doing. Once it breaks out and you hit here, just go short. Put your stop up there. If you get stopped out, make up for it on the next trade. So that's ES. Now let's look at RTY. A lot of people trade RTY. RTY is a very good, it's in between ES and NQ. NQ is pretty wild. You got to have big stops on NQ. But when you trade ES, it's actually a little more, I guess, ES is a little less wild, but still good money, but it's a little bit slow. So RTY is kind of in between. RTY moves better than ES usually, but it's not as wild as NQ, but it's like in between. That's what I have found with it. RTY is $500 a contract on NinjaTrader. Trade's good. You're making $50 a point. There's 10 ticks in a point. A lot of people don't know about RTY, but it's a very good one to trade. I have settings posted in the indicator for what to use, what I recommend, and then you just find what works for you. But let's just say this right here. Let's see, this was the opening right here. So if you come up and grab, see, the opening is right here, so you would have gotten, say, the worst or best case would be $300 there, and you went in here, best case there would be 260, and again, best case there would be 155, and if you entered here, your stop wouldn't have got you there, and then best case scenario is you've been 955. Come into here, best case would be 335. So if you just trade to, say, the first target, and that's all you do, if you just trade to that first target, there's 195. You trade here, you miss the target, but you start pulling back. So maybe you got 115. Right here, you're going to have the first target of 175. So you're looking $150, $200 on average for the first target. So let's just say that you're hitting your first target quite a bit, and as you can see, it usually hits the first target. It didn't there, and it didn't there, but for the most part, it hits those targets. And if it does, and if you just take the profit on the first one and don't even take the rest, which I would let it, I'd bring my stop up and trail behind it. But if you didn't, and let's just say you averaged 175 a target. For numbers' sake, I'm going to say 200, just for numbers. So if it's 200, and if you do that 10 times, that's 2,000. And if you look at this, right there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right there's 10. So there's 10 times that you would hit your target right there. So there would be your goal. And once you get to where you're happy with it, you just increase your contracts. You trade 2 contracts or 3 or 4 or 10 or whatever you want to do. And you hit your targets and you hit that one and you just let the rest go. Maybe, or just candle chase it's what I call it. You take your stop and you keep moving your stop up according to the candles or these lines. Let's look at YM. Same thing. It's just a roller coaster. Lots of trades in here. If we go, this is 2 o'clock. Usually about 2:30, I like to trade. Usually get some pretty good moves. Just on this one move, you potentially almost $1,500 right there just in one move. One contract, $500 to trade. You look at this, you can see as long as these lines are coming down, usually it is good to stay short. If the lines start going sideways, it's a lot of times you're better off to either take a real quick target like this first one, or just stay out of the trade altogether. Once you start seeing the lines going sideways, you're going to have range, and then when the lines start coming back up, maybe you start taking longs again. And then you go sideways again, maybe you don't. You wait on it to start coming down, and when it does, you start taking your shorts again. Or just go ahead and enter every time, and then just keep your stops tight. And maybe you make 1, 2 points on it, or 3. Maybe you make 4. Depends on what you do. Well, actually, YM you'd make more because it's based on points, no ticks in it. So I think it's like $10 a tick. So if you got or $10 a point. So if you had 10 points, it's going to be $100. And I know it's 100. 100 is $500. Yeah, so it's $10 a point. Let's look at gold. A lot of people trade gold and silver and so forth. Silver works just the same. This one right here, Friday was more choppy than what it usually is. You can see right through here when it's like that, you're better off to stay away. But again, if you'd got in on this chop and took a profit at the first target, it's 220. Even with all this chop, you could have made money on that. This one right here, you enter, it went up, pull back. Once it goes up, starts pulling back, just have your stop above there. So there's, $50 or $80 or so. There's a lot of good money in there. This one right here, if you take it all the way to the bottom, which we know you're not going to get the bottom, but that's your potential. And it just depends on the person's trading ability for what they would be. So you're saying cherry picking. So let's just move this back. I got it on a 30-day chart. And I don't know why those come on there. Let's go ahead and remove the drawings on there. There we go. And let's go ahead and look at this one. This was February 3rd, and you saw I just scooted it back. Right here's the open, 9:30 or so. And if you come up here and you traded the open, you would have made at the most $14.50 on this run. So even if you got half of that, $700 or so. So that's good money. I don't usually trade gold because it's a higher margin. I've got the margin, but I don't trade it because I can make just as much money on something else for less margin. So I could put up more contracts on, say, ES, RTY, or YM, even NQ. NQ is half the margin of gold. I trade gold every now and then if it's moving. I'll pick up some money, but I usually don't trade it. We're going to look at crude oil. A lot of people trade crude oil. So this was on Friday. This is the end of the day. You can see it actually worked pretty good. We come up here on this one trade just to give you an idea. The most would be 23.50, so that would have got you that trade. You have these little ones. You know, if you went and took it at that peak, it's 220. And if you got in right here and took right to the bottom of that, it's 500. So there's a lot of money in there that you can pick up on these little switchbacks and just trading red to white. You know, even if you traded this one and traded all the way to white, where it changed, there's 1890 if you just traded the red to white. Some of these in here, you would have not made as much doing that. There's red, there's white, there's 450. Here's white to red, you would have lost $40, and there to there. But when you're in this downtrend, you're better off just to go ahead and take your shorts. Don't take the longs. You might miss a big run. Like, you know, when this comes down and it's trying to come up, eventually, when you have this big one, then it pulls back, it will usually take off on you. But again, even if you had taken this long right here, at the most would have been 580. That's a lot of money to give up. I'm willing to take that risk to get that unless we are in a ski slope like this. When it's like that and it pulls back and it comes down, a lot of times I will take that little one because it'll pull back. We made a lower high here than here, so that's a good sign that we're going to go ahead and keep going. Maybe you hopped in another short from all the way up there and wrote it down. That's not part of the strategy, but you know, when you use this indicator and you start looking at how it runs, then you can start seeing that, you know, when you make that lower high, that it could sell off there. You may get in right there and then it pull back. Just make sure it stops right above there. But that's up to you for how you would do that. This one right here, you would have lost because if it pulled back, you got in a short right there, you would have lost that. So if you play it red to white kind of, then you're usually going to do a lot better in the long run. But you know, even if you just played the one target, if you played one target here to there, that's $140. That's nothing to sneeze at. Especially you put 5, 6, 10 contracts behind it. That all adds up. So let's look at a lot of people trade bonds and they say, Brad, what do you got that'll work on bonds? So UB, I've always checked on, I think it's ZB. Let's see here. Where is that? Yeah, ZB. But someone told me this week, and because I don't trade bonds, but they said UB is actually a better one. It's more liquid. It's got better moves. So I pulled it up, and he's right. It works a lot better. That's why we work together as a community. Let's just say you got in right here, and you stayed to the red. There's 1,500. If you got in here, and if you got out right there, that's going to be about break even, but you're not going to allow that. Let's just say you stopped out there, 468. This one here, you would have lost some money probably. See, yeah, it depends on your risk tolerance. It depends on your stop. I wouldn't have allowed mine to go down. My stop would have been up in here, so you'd lose a little bit. But again, you're going to have some losing trades in here. You're not going to be all, you know, smelling like the roses all the time. This one right here is 625. Again, all you have to do is just trade white to red pretty much. These take profit lines is something that you should consider, and you know, I think that a good idea is to scale out. Take 1, 2, 3, 4, 5. So depending on how many contracts you're trading. If you're trading 10 contracts, maybe you take out 2 here, 2 there, 2 there, 2 there, and 1, and maybe leave 1 for a runner in case it takes off. So there's a lot of things you can do with it, but the indicator works really well. You can purchase on our website. There's a link down in the description that will show where to get it. It works very well, and I'd love to get you on the team. It does very, very well. Also, the labels over on the side, I've got those to where if you're trading a DOM or DOM, if you're trading a DOM, you'll have your labels out there where you can see the exact numbers, and then you can open up your DOM and just put in those sell prices on it. So you can trade this from a DOM as well. Have your DOM open over here, and then have your chart on this side, and then you just trade off of that. So sometimes that'll make it a little bit easier for you, other than hitting the chart trader and stuff like that. Maybe I might make a video on how to do that someday, how you can use the DOM to trade off from. It works very well, and if you have any questions, let me know. I'd love to get you plugged in on this weekend, and that way you can go ahead and start using it on the open tonight. 6 o'clock Eastern time is when the market opens. It's going to trade until Monday at 1 o'clock, shut down, and then open back up at 6 o'clock Monday evening Eastern time. So for the President's weekend, that's what we're on right now. Have any questions, let me know. Let's get you started on this and possibly building up a nice bank account. Have a great day.